Hello, everybody, and thanks for joining us for a presentation of Northlsle Copper and Gold at our Red Cloud Green Energy Conference. I have the distinct pleasure of introducing to you Sam Lee, who's the president and CEO of the company, who will give you a rundown followed by questions. I will pass it off to you, Sam. Thank you for joining us.
Thanks a lot, Seb, and thanks Red Cloud for having us present at this very important and topical theme in the world today, sustainable copper. So Northlsle has a project that's located on the northern end of BC. We have a PEA that outstanding, and it's a copper, gold, moly, and rhenium project. The PEA suggests about $1 billion project on an after-tax NPV basis. 22 years mine life, about 156 million pounds of copper equivalent over that life of mine. So I would characterize this as a intermediate sized copper project with a massive gold credit. That gold credit is approximately 100,000 ounces of recoverable copper over that 22-year mine. So a very short payback period and a attractive IRR, approximately 19% after tax. We are located, as I said, in British Columbia, which there are many mines of this nature that are currently in production. It's a very good jurisdiction to operate and permit in. It does take a little bit longer, but to go through the permitting process, which I'll go through shortly. But once you have that permit, you can be assured that you have it for the life of your project. And obviously, you have the support of the First Nations and community participants fully as part of that public permitting process. We are going down the path of initiating that as we speak, as we announced earlier today, and I can go into that in a little bit more detail. In terms of leadership, we've got over 200 years of exceptional leadership at the board, management, and strategic advisory level. We also have a very core group of individuals that will progressively look at this project and develop it in a way that is acceptable to future standards, not necessarily what's been done in the past. So we're very keen to get this project up and running, and we've got the team to do it. On the exploration side, we have a fully financed 10,000 meter drill program. This is 100% exploratory, so that's to build out our development project, in addition to finding the elephant for future production potential. That exploration upside is across a district play with over 50 kilometers of strike length. So very excited about that program. So in terms of copper, I'm not going to spend too much time on this, but if you believe in the thesis that there's going to be approximately 8 million tons deficit of copper by 2030, then you really have to understand that that is effectively 8 of the world's largest mines going into production over the next 10 years, which at this point does not seem like a possibility, given that we haven't even identified them yet. And the size of these mines typically take 10 to 20 years to actually go through the permitting developing process, which again is not reasonable to believe that if we haven't found them, that this deficit will be satisfied within that 10-year period. So our whole idea, the concept about Northlsle and our project, is it's small enough but material enough to actually make a difference within that 10-year period where we see that exceptional deficit occurring. So we'll go through the timeline for our project, but it's effectively a two-year timeframe. So over the next 6 to 7 years, this project should be in production. I think a lot of people are aware of what is driving the demand for copper, electric vehicles, wind demand, solar demand. All of this has a tremendous impact on the copper demand side. Clearly, that 8 million tons of incremental demand is driven by not only what's happening in China, obviously at a significant GDP growth of approximately 6.5%, but also the incremental demand coming from the electrification narrative across the rest of the world. So our project is also highly levered to not only copper, but gold and moly prices as well. And as you can see on both sides, gold and moly have performed exceptionally well over the past 5 to 10 years. significantly above the pricing that we're using in our PEA. So on a capital markets perspective, we're obviously growing steadily. We've got a very tight shareholder base comprised of high net worth individuals, a bunch of retail holders, insiders, and institutions make up over 27% of the shareholder register. We're currently have about $9.1 million in cash, so well financed. We have no warrants outstanding. It's due to the belief internally that warrants effectively provide a cap to the share price, which is obviously not something we want to do at this point. I think it's also important to note that management and insiders own approximately 22% on a fully diluted basis, and that's through our options plan. I don't take a salary. I get compensated fully through the leverage to the share price through my options. So we are all aligned from a management board perspective with the shareholders. So in terms of our leadership, as I mentioned, over 200 years of leadership experience spanning major companies from financing to operations to development across many disciplines. Dale Corman is our chairman. He was probably best known for selling the Penasquito deposit to Glamis Gold Corp for $1.2 billion, and really has set the stage to advance this project in a very quick and meaningful way over the next few years. The experience level on the strategic advisory and board complements the tenacity and energy and ability within the management team to move this project ahead. Again, this is informed by many years of experience across many disciplines with leading companies, as you can see below. I talked about the PEA highlights. I think the other important thing to understand is this is a pretty significant copper deposit. It's approximately 5 billion pounds of copper equivalent in indicated resources. 65% of this is copper, 35% is gold. But if you want to look at this on a gold basis, it's about 9.3 million ounces of gold equivalent on an indicated resource base. That's not including, of course, $3.8 billion pounds rather in copper equivalent in an inferred basis. There is significant district potential. We have over 50 kilometers of strike, and we're literally just scratching the surface today with our 10,000 meter drill program around Red Dog, Pemberton Hills, Northwest Espo, and South McIntosh and Goodspeed. So lots of news to come over the next 6 months around that activity. And in terms of our infrastructure, everyone knows the best place to build a mine is right next to another one. We're right next to the BHP Island Copper Mine. Our property literally borders that project, which was in production for 24 years. To the right, bottom right quadrant, that's where the BHP Island Copper Mine existed. It was, again, 24-year life of mine production. It was a 345 million tons at approximately the same grade and commodity distribution. That deep sea water port still exists today. BHP used it to ship the concentrate, copper moly concentrate, to Sumitomo, very clean, high premium concentrate. And our project, Red Dog and Hushamu, is approximately 25 kilometers away from that. So it's a very strategic piece of infrastructure, arguably the closest deep sea water port on continental America to Japan. Excuse me, all the road networks are in place. 80% of them are maintained by the BC government. The other 20% are maintained by Western Forest Products, who has the timber rights for our property. So extremely easy to get in and out. It's about a 40-minute flight from Vancouver to Port Hardy, and an approximately 20-minute drive from Port Hardy to the Island Copper Mine, which is where the hub of that operation was. Port Hardy is a very robust mining and forestry town and has seen industry active for over 200 years. So in terms of our grade, we're kind of in the middle of the pack. We're an average grade as it relates to BC copper mines. Our distribution, as I said, is about 62% copper, 33% gold. In the end of the day, we can do what we do in BC here because we have extremely cheap access to power and great infrastructure. So our our scoping study was done at 7.5% per kilowatt hour, and access to all that infrastructure enables us to mine relatively lower grades in the province. So the other big component about our project specifically is our strip ratio. It's 0.7 to 1, that's waste to ore, and by any measure, any reference point, that is a very low strip ratio, and an even low relative to our BC comps as well. The other component that came out of the PEA is that we are contemplating a 75,000 ton per day operation, and that operation is, in our view, right-sized for obviously not only maximizing the economics of the project, but also ensuring that we are able to permit this within our 2-2-2-year timeframe, which I believe is absolutely essential to take advantage of the current copper environment that we're in. So for every 25 cents in copper price movement at $3.25, which is what our PEA was based on, every 25-cent movement implies a $300 million increase in the after-tax net present value 8% discount, which is an extraordinary leverage to the copper price. And that's why we're really excited about this environment. We believe that the incentive price is around $3, $3.25 for this project, and clearly at $4.30 where we are today, this project is extremely attractive. So in terms of valuation, clearly we are undervalued, and part of that is because of awareness, and part of that is because we're early stage. And so the things that we are, they're both things that are obviously in our control. In terms of our awareness, we've been obviously working the marketing effort over the last few months since Nick Van Dyke and I joined, which has come about in very positive effects. And in terms of developing the project, we today just announced a program that will see the project move forward into the pre-feasibility stage study, committing a significant portion of capital to effectively identify the critical path items that will move us up this curve. As you can see, there is definitely a correlation between projects that are more advanced versus projects that have a resource and a PEA that perhaps has been stalled. So we will move up this curve. We will move up in a way that is fast, quick, and obviously thorough, and expect to get that re-rating shortly. So the other component about this project, again, as I mentioned, was a strip ratio. This is just a depiction, an illustration of one of our projects, Red Dog, which is less than 0.2 to 1 times strip, which again informs the overall strip ratio of 0.7 to 1, which also comprises of our Hushima deposit. So within those two deposits, that defines the project as you see in the PEA. From a capital efficiency perspective, we were our moderate capital efficiency. We're not high, we're not low. And I think that's consistent to the size of our deposit, and it's usually a function of the size of any deposit. If you've got a big project, it's not capital efficient. If you've got a small project, it is very capital efficient, but perhaps not material. So we're kind of right in the middle of that playing field. As I said, the very low all-in sustaining costs are informed by the existing infrastructure. We fall within the first quartile of the all-in sustaining costs, the copper production curve globally. And again, that's just because of our access to extremely cheap power and existing infrastructure in BC. Sustainability is at our core, and I don't mean to refer to this in any sort of trivial way, because the reality is everyone understands that these incumbents are making very bold statements of being carbon neutral by 2050, which I think is a fantastic aspirational goal to have. But the reality is you cannot be carbon neutral unless your source of power is renewable. And in BC, 100% of our source of power is clean, renewable power. In fact, we've got one of BC's largest wind farms just to the north of our property, which is owned by one of the First Nation groups, partially owned by one of the First Nation groups that we're dealing with. So everyone seems to be very much aligned to this project moving ahead, and the ability to potentially make this into a carbon neutral, potentially carbon net zero project is realistic given our source of power. I think I mentioned briefly that there's two components to our exploration program. That's the 10,000 meter program that we've defined. So one portion of it is obviously to expand the North Island project, and a significant amount of that expansion we hope is going to come from Red Dog. So we're initiating 8 holes at Red Dog, approximately 3,000 meters. And then we move over to Hushimu afterwards, which is the larger deposit that informs the other 22-year mines. So Red Dog, the goal is to find more of the higher grade stuff, and Hushimu is to find more tonnage. On the new discoveries side of it, we have Goodspeed, we have South Macintosh, and we have Pemberton Hills, all three of which are very highly prospective areas for large elephant hunting porphyry deposits. So just to wrap it up, our next steps, there's a lot of things that need to be done over the next 6 to 12 months. And most of these things are going to, I'd say, have a very impactful effect on the share price. So the first thing is to complete our 10,000 meter drill program. So over the course of the next 6 months, you will see results coming out of that program. We are going to start on our metallurgical test work, targeting our increased gold recoveries, grind size, reagents, et cetera, et cetera. So that should come over the next 3 to 6 months as well. We're going to commence our baseline work, which effectively starts the clock on permitting. That is a significant portion of the $1 million budget that we just announced today. Obviously, continue with our First Nations engagement. We believe that in order to adhere to that 2-2-2-year timeframe, we must have exceptionally strong support from those First Nation groups, and we would like to see that culminate into in the form of some sort of agreement, which will hopefully get out sooner rather than later. And then, of course, we'll continue with very initial surface exploration at Goodspeed and Macintosh. So that what that does in 2021 is not only provide a lot of news flow, but that also enables us to target a completion of the pre-feasibility study in 2022. With that, I'll happy to take questions.
Thanks a lot for that, Sam. That was a very good and quick run through of what is a very exciting project. The first question I have here: are there any current plans to uplist at the OTCQB or QX to attract U.S. investors?
Yeah, for sure. You know, we believe that we have to be accessible to all investors who want to invest in us, and so we're in the process. In fact, we're working with Red Cloud on a number of angles and options available to us. And so, yes, that is that's in our purview. Thank you.
Very good. And then can you speak to some of the institutions that you have on the register?
Sure. So Sprott is our lead institution. They collectively, within both their funds and some high-profile individuals, own approximately 8% of the company. And they continue to be very strong, supportive shareholders. We have a number of other institutions that came in through the last 2 offerings. We raised $10.5 million just when I started, when Nick and I started. And I would say about 30% of that was institutionally held. So I'd say a handful of institutions, but Sprott's our lead institutional investor at this point.
Very good. We'll just try to get through some of the other ones here. So you mentioned that you're extremely leveraged to the copper price, and every 25 cent move affects the asset value tremendously. How are you leveraged to the gold price?
Yeah, it's the same story. I think the reality is gold is a 35% component of our commodity mix. So to put that in perspective, I think the most interesting metric I could use is if we were to ever put a gold stream on that gold, 100,000 ounces a year for 22 years, 5% discount rate. So that's a last money in financing for $400 ongoing payment, $1,550 gold price. That's a $1.2 billion calculation, right? So that's a 5-line calculation. Anyone could do it. But that shows the significance of gold as it relates to this project. So the way I think about gold is because it is extremely valuable from an option value perspective, it not only speaks to the sensitivity around cash flows, it also can potentially be used in part, not necessarily in whole, as a financing tool for when we get to that stage of having to finance the Capex.
And then just quickly before we wrap up, can you talk to Robin Tolbert, who joined your team or is joining your team as VP Exploration?
Yeah, so Robin is an exceptionally experienced individual. So we've been obviously in succession planning since I've joined. This is a company that, has made extremely strong inroads with this project. But this is a succession plan that is going to continue to keep on going. And so Robin was identified as effectively a person that can take Jack's lead. Jack is obviously was our past CEO and VPX. And he's going to stay on as strategic advisor to ensure that we do not lose any of the continuity and the momentum that we have in these projects. But Robin has 40 years of experience himself. He's worked at Pebble and he's worked at many other massive copper porphyry projects around the world. And he can seamlessly pick this project up. And that was our biggest attraction, someone that could play a very strong part in a program that's already been defined for us. And momentum that's already been established over the last 10 years through Jack's involvement. So we're very happy to have him, and we're looking forward to introduce him to the market in a very short order.
Very good. Well, in summary, great team, low strip ratio, capital efficient, material size, leverage to moving gold and copper prices, and in the right location. So keep an eye on this name. That's Northlsle Copper and Gold. And thank you very much, Sam, for your time.
Thanks, Ed. Thanks, Rick Club. Have a good day.